Welcome back, everyone, to the twilight zone of global economics. Just 1 week ago, the US-China trade war, already a convoluted mess of policies and posturing, took a turn so bizarre it's hard to tell whether we're watching a serious geopolitical standoff or an absurdist dark comedy. In fact, at this point, it might be both. The Trump administration seems desperate to make China reverse its retaliatory tariffs. But at the very same time, they're fanning the flames of the conflict, escalating it into something that feels less like strategy and more like stubborn theater. And the latest act? A tariff wall so outrageous it borders on parody. The US has now hiked tariffs on some Chinese goods up to an astronomical 245%. No, that's not a typo. 245%. At this point it feels more like satire than policy. And yet, amid the chaos, we hear boasts from the administration, claims that over 75 countries are scrambling to make new trade deals with the US. But here's the catch. The most important trade player of all, China, isn't playing along. They're not even sitting at the table. And that's sending shivers down spines from Wall Street to the White House. Let's not forget what's happening at home. The reality on the ground in the United States, a slow-motion train wreck. By trying to decouple from Chinese manufacturing, the Trump administration isn't just taking a jab at Beijing, it's punching American businesses in the gut. Small and medium-sized enterprises that rely on Chinese supply chains for affordable goods are now watching their cost structures implode. And when you scale this up across entire states and industries, the consequences become catastrophic. Take California, for example. The state is preparing to sue the federal government just to stop these tariffs. That tells you everything you need to know. This war isn't just international anymore, it's domestic, and the resistance is growing by the day. Meanwhile, economic indicators are flashing red across the board. Interest rates are on the rise. The once mighty US dollar is slipping lower and lower. Traditional relationships between bond yields and currency strength are unraveling. The old economic rulebook thrown out the window. What we're witnessing is a dislocation of epic proportions, a storm system no one knows how to navigate. If Trump keeps doubling down, if he keeps escalating and flip-flopping like this, things could spiral fast. Imagine this, bond yields rising as the dollar simultaneously crashes, a scenario once thought impossible, now sitting on our doorstep. If this double blow hits, consumer confidence could fall off a cliff. And the American consumer, already fragile. Thanks to this trade war, the effective tariff rate in the US has surged from 2.4% to over 26%. Even if exporters absorb some of that, which is unlikely, prices for American consumers will rise by over 10%. And that's why consumer sentiment is collapsing. Inflation expectations for the next year have soared to nearly 7%, despite the political smoke and mirrors. Even the Federal Reserve has thrown up its hands. Quietly, perhaps reluctantly, they've admitted that they're powerless in the face of this chaos. They can't fix inflation caused by tariffs. They can't stabilize a supply chain crisis from Washington. All they can do is mop up the mess. One Fed official put it bluntly, the new normal, the long-term shape of the economy, is out of their hands. The executive branch, not the central bank, holds the reins now, and that's a terrifying thought. Because here's the paradox. The Fed can't cut interest rates without further destroying the dollar, and it can't raise them without crashing everything else. The Fed has become the janitor of a party it never wanted to attend. And yet, what do we see from the White House? Desperation. Trump is now demanding that China call him, literally call him, to make a deal. He wants a win. He wants a photo op. He wants to look like the hero. But the irony is staggering. He wants China to help de-escalate the very war that he started. And still, there's an air of arrogance in the administration's messaging. A smug belief that China needs America more than America needs China. They want what we have, the American consumer, they claim. But this isn't the 1990s anymore. The world is changing, supply chains are evolving, and China is preparing for the long haul. They've already hit back with a vengeance, boycotting Boeing aircraft, slapping 125% counter tariffs on US imports. And make no mistake, Beijing is in no rush. Chinese officials have made it clear, they're open to talks, but only if the insults stop, particularly remarks like J.D. Vance's degrading slurs against the Chinese people. Until that clown show ends, Beijing isn't moving an inch. And the markets? They've seen enough. According to Bank of America, global investors now have the worst outlook for the U.S. economy in 30 years. There's a record number of institutional players fleeing U.S. equities, and we haven't even hit the bottom yet. And then there's the Treasury Secretary, dodging questions like a pro, pretending that a collapsing market is just a blip. This man, a billionaire ex-hedge fund manager, tries to deflect by talking about long-term capital management in 1998. What does that have to do with the trade war in 2025? Nothing. It's a smoke bomb, a distraction. The truth is simple. Someone is dumping U.S. treasuries and equities. That's why bond yields are spiking while the dollar tanks. This is not normal. This is not a correction. This is the crack in the dam. And while the U.S. flails, China quietly gains ground. In a twist no one in Washington saw coming, the trade war might actually be benefiting Beijing. Chinese exports in March jumped nearly 6% year over year, crossing the trillion-dollar threshold. The world, facing tighter wallets and economic fear, is snapping up cheap Chinese goods while they still can. And China? They're playing the currency card, hard. The yuan is now at its weakest level since 2023 against the dollar, deliberately set at 7.2121 by the central bank. Against the euro, the yuan hasn't been this low since 2014. The message is loud and clear. China is making its exports cheaper for everyone except America. Europe, Southeast Asia, these are the new battlegrounds for Chinese trade, and Beijing is preparing for economic war. They're stockpiling cash, they're hoarding trade surpluses. In the first quarter alone, China posted a massive $273 billion surplus, 12% higher than last year. Why? Because when the time comes, they'll need that surplus to unleash a stimulus tsunami to maintain their 5% GDP target. And it's already working. Domestic retail sales are booming. Furniture, smartphones, household appliances, double-digit growth in every sector. The government is using trade surpluses to fund stimulus, lower interest rates, and spark spending without risking financial instability. Unlike the US, China doesn't need to print money to stimulate growth. They're earning it, strategically, through exports. This is what a long game looks like. And here's the kicker. If China wants to really turn up the heat, they can start cutting off exports of high-tech components, especially semiconductors. That would cripple American industries in ways no tariff can. Electric vehicles, computers, communications infrastructure, all would suffer. So far, Beijing has shown restraint. But if pushed too far, don't think for a second they won't retaliate in kind. We now know, thanks to reporting from the Wall Street Journal, that Washington's endgame, especially from National Security Advisor Jake Sullivan and Economic Advisor Lael Brainard, is to contain the Chinese economy. They're pushing U.S. allies to restrict Chinese investment and trade in exchange for tariff relief from the U.S., but this opens Pandora's box. Will countries impose quotas on Chinese goods, ban investment, raise their own tariffs? This is the fork in the road, and the world is watching. Because at the heart of this conflict is a chilling reality. We are heading toward a bifurcated world. A global economy split between two superpowers. And Trump wants every country to choose, the US or China. But will he like the answer? Let me know in the comments. Will China cave to Trump's demands? Or are they preparing to drag this war out until the US itself breaks first? Hit that like button, subscribe for more, and stay safe out there. We're just getting started.